Okay, guys, so we're continuing to talk here with Angelina Casiello from Radian Mortgage Insurance, and I have a lot of clients come to me and ask multiple questions with different scenarios that I've had to address on my own, and I've leaned on her to kind of help out with some of these questions. And so one of the questions I get is, when can I remove mortgage insurance? And, if I had a home that was in distress when I bought it, can I remove the mortgage insurance if there's enough, I guess, improvement to the property, if you want to call it. And then, we have natural pay down. We also have, home appreciation and how much that appreciates over year. So we're going to talk about that with her. So a lot of clients, they come to me and they're asking me these questions. And so I go, well, let me talk to you about it.
Sure.
And then can you give us the insight about what is the true facts on that?
So we'll start with the easiest one. That's going to be the natural pay down of the loan. So you go out, buy a house, and let's just use a round number.
Okay.
You pay $100,000 for the house.
Okay.
When you've paid that loan down to 80%, so now you're at $80,000, you can request removal of the amount.
Okay.
There's the Homeowners Protection Act that was put in place so that can protect the consumers. So once they get to 78%, whoever's servicing that mortgage, so whoever you're making your mortgage payment to, they must remove it automatically. So when you buy that house, you have an amortization schedule. At 78%, it will automatically come off.
Mm-hmm.
At 80%, you can call and get it removed. But
Okay.
it's up to the servicer, and that's under the homeowners.
And the servicer, to everybody out there that doesn't know what a servicer is, that's the mortgage company that they're making the payment to.
Correct.
Right.
And that can change. So sometimes it changes
Right.
hands a few different times.
It's just mortgage talk for
Yeah.
mortgage company. We call it servicer. So
Exactly.
let's say I bought a home.
Sure.
And let's say I bought a home and it had tons of work that needed to be done. Okay. And let's say I put $100,000 into it.
Sure.
Can I come to my bank and say, hey, I want to try to get my mortgage insurance removed because I think the value of that has now increased significantly in a short window of time?
You can, and there's no waiting period on that. You just want to make sure that you're able to prove that you improved the value of the property, and you've got receipts for that, and you can show that. But yes, you can remove your mortgage insurance.
So let's say if I had a contractor, it has to be a licensed contractor, correct? Or does it have to be that, or it doesn't? I mean, because let me give you an example. Some of the stuff that when you do an add-on to a home, is it properly permitted? These types of things. Does that necessarily be needed, or does it need to be needed? Like, whatever the appraisal goes out and appraises the property for, it's what it appraises it for. So.
Yes, exactly. Whatever they're appraises.
Whatever it appraises it for.
So I would speak to your servicer on that as well.
Okay, so that's.
If you have a situation that you're like, okay, I did all these improvements, call them up and say, hey, I did all these improvements. Everybody might have a little bit of a different answer for you, but the guidelines that we go off of, which is Fannie Mae and Freddie Mac, which are the government agencies that buy mortgages, they say that if you have improvements to the property to improve the value of the house significantly, then you are able to adopt the mortgage insurance.
Now, one of the things I want to talk about, so we have a lot of down payment assistance programs that's out there. Conventional loans have a few of them. There's a way to even look and see if it qualifies online, and we've talked about it quite a bit. And there's perks and benefits to having a lower mortgage insurance for like home ready, right? Fannie Mae. Can you discuss how that works with Fannie Mae and how they offer that, and how that insurance is less? Why is it less? Why is the premium less on those? Is there any real reason for that, or?
I don't have a good answer for that, so you have to cut that part out.
You don't have an answer. So basically.
I mean, pretty much the agency sets what they're going to allow for coverage, and then the coverage is lower. That means the lender gets less money. Kind of like your car insurance. If you have 100,
I got you. Yeah.
So they get paid less. Why they make it less for the
Nobody
loans
knows.
that I think are riskier, I don't know.
Yeah, and that's what I always wanted to know.
Yeah. So let's cut that part out.
That's a wrong
but,
question.
I wouldn't.
All right, so to kind of wrap this up, I mean, you got borrower paid mortgage insurance, lender paid mortgage insurance. We talked about that. We have a lump sum single premium, right? Then you got a bi-weekly. I don't know if we really talked about that, and this is kind of what I want to talk about. Is there any situation, I'm sure there is obviously if you're offering it, that somebody would take on a bi-weekly, what is it, by month? What is the one, there's the fourth one.
Oh, there's split premium.
Split.
Okay.
Sorry.
Teaching me something new. I was
Sorry.
like, bi-weekly? All right, let's do this. No,
So-
split premium is what you're
So yeah, we're gonna talk about a few things, but split premium. Like, so when would somebody use a split premium? That's what I meant to say.
Okay.
Biweekly is a mortgage talk or mortgage term.
Yeah, so what split premium is, it means you pay some money up front, and then it allows you to have a lower monthly payment. So it's kind of a
combination.
A combo between monthly and single premium if we put them together. And when you might use that is if somebody's ratios are really tight on the loan file,
Sure.
and you're just
Because it lowers the payment, right? Because if your
lowers the
insurance premium, monthly premium is lower, then obviously your payment's lower, which means your debt ratio is lower.
Yeah, and again, sometimes people are very stuck on a particular payment. They want to be at this number and only at this number, and so there's different ways to play with mortgage insurance to try and get you where you need to be. Doesn't work in every situation, but that's why you work with an expert that knows what he or she are doing, and can get you where you need to be. But split is basically some upfront and some monthly. It's a combo.
Anything else to say? You think we're good?
The only thing we didn't talk about was the appreciation on the cancellation.
Okay, let's talk about that.
Okay, so a lot of people want to cancel their mortgage insurance because we've been very fortunate in Las Vegas that we've seen some great appreciation over the past few years. But there is a waiting period.
Okay.
So say you bought your house last year, and I hear this all the time. People are like, "Oh, I bought it, and there's all this equity, and I want to cancel my mortgage insurance right away." Well, it's entirely up to whoever's servicing that mortgage. However, the government agencies that everyone underwrites to their guidelines say that you have to wait between 2 and 5 years, and with an appraisal, it has to come in at 75% of original value.
Okay.
Or your loan has to, your appreciation has to come at 75% of the original value.
Okay.
Most times